Romania has been going through a period of volatility, and investors are paying close attention to developments in both the credit rating and the country's fiscal situation. Late last year, Fitch revised Romania's outlook to negative, and earlier this year, S&P did the same. While both agencies kept Romania at investment grade, they signaled concerns, particularly about the budget deficit. If Romania were to be downgraded, it would fall into junk status, something that has not happened in recent years. Yesterday, the Romanian government published its draft budget for 2025. The key assumptions include GDP growth of 2.5%, a budget deficit of 7.04% of GDP, and inflation at 4.4%. These numbers are generally in line with market expectations. Analyst consensus from Bloomberg points to GDP growth of 2.6%, a fiscal deficit of 7%, and inflation at 4.1%. Given that, the government's projections seem reasonable. However, the fiscal deficit remains high, which is precisely what rating agencies have pointed to as a risk factor. If Romania were to be downgraded to junk, this would have significant consequences. First, it would likely lead to higher borrowing costs for the government, as investors demand greater compensation for risk. Additionally, some institutional investors, such as pension funds and large asset managers, are restricted from holding non-investment grade bonds. This means that they would be forced to sell their Romanian government bonds, which could put pressure on prices. In equities, a downgrade would likely add to volatility. We could see a loss of investor confidence, capital outflows, and downward pressure on stock valuations. That said, it's important to keep in mind that Romania remains a fast-growing economy, and fundamentals in some key sectors remain strong. S&P has outlined what would need to happen for them to actually downgrade Romania to junk. They are watching the government's efforts to reduce the deficit. If they see continued fiscal slippage, meaning a lack of effective measures to control spending and improve revenues, they could take action. On the other hand, if the government can show credible steps towards fiscal consolidation, Romania may avoid a downgrade despite the current negative outlook. The first regular opportunity for any rating agency to take action is on February 21st, when Fitch is scheduled to review Romania's rating. That will be a key moment to watch, as it could set a tone on how other agencies respond later in the year. We'll see what happens next. While there are risks, our base case remains that Romania will take the necessary measures to maintain its investment-grade rating. However, we do expect volatility, and the situation is fluid. We'll be closely monitoring developments and will keep you updated as things evolve.